Rob, we had a bit of a nasty sell-off yesterday. The market is a little bit higher today, but not really making up for yesterday's losses, is it?
No, not really. I think this morning we opened up quite firm. I think there was a lot of people taking profit on their shorts, and now the market waiting to see what happens in the States. S&P futures and the Dow futures look like a positive opening to start.
Well, Rob, I mean, we have breached some technical levels again, haven't we? Because we were trading above 25,000 last week. We're almost back down towards that 24,000 mark. Do you think that there's more downside from here?
Well, there's a bit of support at 23,700, and the market can come down to that point. If it breaks below there, then we're going to have to take a look. So there's a little bit more downside that is in the market that can happen on our side, and we're going to wait to see if we get down to that support level of 23,700.
Robert, are you seeing this as a healthy correction or perhaps something more ominous?
Well, it's definitely a healthy correction at the moment. I think we have to break quite a few support levels on the way down to see if it's going to be more severe, and we're going to break down into a bear market. We got on the S&P 946 was a break up. It's trading now 980. If it gets back down to that 946 level and breaks through that, then we're going to go back into the bear trend. So we've still got a little bit of leeway on the downside before we go break down into the bear market territory.
And of course, we did have some pretty nasty drops in the US overnight as well. We had the S&P down 2.5%, the Dow down 2%, but the S&P still holding at 980 points. So some way to go before it gets to that 946 level.
Yes, it traded up at 1014, and there's been a lot of profit taken from that level. We settled down last night at 980, and it's still 40 points down to that 946 level, give or take a few points. And I think that that is really the level that we have to look for.
Of course, we have seen a bit of improvement on the JSE this morning. We also have the Rand trading stronger at 8 Rand 5 against the dollar. So do you think that we're seeing some risk appetite coming back into the market today?
I think so. Obviously, we saw also that MTN Bharti update again. So I think that's put a little bit of a positive swing on the Rand. And I think people are coming to buy some of these good quality stocks at lower levels.
Of course, this MTN Bharti deal has been playing out for quite a while. What's the expectation from the market? Do we expect something to happen here?
I think the market does expect something to happen, but these complicated and big deals do take time, and I think it'll be a good few months until we get clarity from this deal.
Of course, we had those GDP figures out just a little while ago, and slightly better than expected. I think Reuters, economist poll by Reuters, had expected a contraction of about 3.2%, 3.3%. Figure coming in at 3%. It's not great, but still a little bit better than expected. Any impact on the market, do you think, this afternoon?
It didn't have too much impact when the number initially came out. I think the Rand is still quite firm. A poor number, though, minus 3%. You know, the South African economy is still battling. Pravin Gordhan said yesterday we're 6 to 12 months behind the rest of the world. So still, we need a spike in the mining or in some construction to push us that GDP up and start to create some jobs.
Well, of course, we did see some economic releases coming out of France, Germany and Japan over the past few days, showing that those economies are starting to grow again. So as you said, we are behind on the economic front, yet our stock market has run up quite almost as strongly as the other markets. So do you think that we could see a bit of a pause here?
It's difficult to say. There's two different types of trades. The ones that are looking very forward and people that are looking at value and how our shares trading right now. At the moment, our economy's been driven, well, our share market's been driven by people looking forward. And I think if they carry on looking forward and it's foreign investment coming through, I think our stock market will carry on at these levels and start to move forward.
Well, looking forward, Rob, which sort of shares do you think offer value for investors at this stage?
We're looking at a lot of our local shares that have got exposure into the emerging markets. And I think that is MTN is one of them, Naspers is another. And one or two of the bank stocks that have exposure into emerging markets. And that's where I'd like to put a lot of our investment.
And of course, we did have that interest rate cut last week, which takes total interest rate cuts in this cycle to 500 basis points. You mentioned a couple of the banks. How about the retailers? Are they offering value, do you think?
The food retailers are still looking really, really good. And I think some of the credit retailers still look quite good with that interest rate coming down. Furniture retailers, however, are under pressure and they've got a few credit problems still. And they're going to have to wait to see how quickly this extra 50 basis points cuts help their business.
Of course, we are going to see some of those results from the retailers in the next few days. We have Truworth tomorrow, and we have Shoprite reporting next week. And of course, last week, Shoprite put out a trading update saying it expects a 25 to 35% improvement in profits. So food retailers like Shoprite really doing well at this stage. But how much of that do you think is already in the price?
I think a lot of it is in the price, but Shoprite keeps surprising on the upside. Good management, and their growth in people coming through the stores is quite high. So I really do like Shoprite.
Of course, a lot does depend on the consumer at this stage, as we know in the United States. What sorts of signals are you getting out of the US at this moment? Because we do see lots of mixed economic data coming out, but unemployment does remain a problem there, doesn't it?
Unemployment is a very big problem, and it's growing still in the States and not coming down. Just a few minutes ago, I think Home Depot came out with numbers, and their numbers were disappointing. So the consumer in America is still under pressure, and that's going to be the real kicker in this economy. If that consumer gets going, I think we'll pull out of this recession. But if they don't, it's going to be a long recovery.
So just to repeat, Rob, which levels do you think we have to stay above if we want to continue with this bull market as we see it at this stage?
Well, looking at the S&P, I think 946 we need to stay above. Otherwise, we're going to move back into the bear trend, and there's a lot of downside risk on that side. In our market, I think 23,700 on the all shares is a number to look at.